You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody, it is time, once again, for Volatility Views. That means it's Friday, 1 p.m. Central, listening live. If you're listening after the fact, could be anytime. Could be 2 a.m. in Estonia, for all we know. As long as you're tuning in, listening, downloading, subscribing, and, of course, keeping those questions coming. We do indeed love to hear from you guys. My name is Mark Longo from the old network, as well as from the optionsinsider.com. Hope you guys are getting some benefit out of the flood of content that's coming your way. If you guys have, in addition to your questions, if you have suggestions for things you want to talk about, for example, a lot of you still have questions about all the craziness, what happens when an exchange shuts down, what happens to the options, all that fun stuff. So we're putting together a special episode about all that stuff because you guys keep asking it over and over again. So if there's stuff like that, if there's particular issues that are really top of mind for you guys you want us to address, or maybe a topic or a show or a guest, let us know. You guys know how to find us, and we're happy to try to accommodate the reasonable requests here on the old network. All right, and joining me to accommodate your reasonable requests today on the Volatility Views show. First, let's go on out to the hinterlands of Chicago here, but perhaps for not much longer, where we are joined once again by the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com, by way of Carmen Line Capital. First off, Mr. Meatball, welcome back to the program. And B, what are these rumors I'm hearing? You're going to be a Texas meatball soon. What the heck is that, sir?
Yeah, no. So we're going to keep our offices in Chicago, but I may personally move to Austin, Texas in the coming months, just because it's a nice change. I mean, we were down there 2 months ago, and it is 65 and sunny, and everyone in Chicago is out. It was like that in February in Austin, and you get a lot of the nice California weather without all the terrible California taxes. So, but obviously you have issues with the summer there, so we'll probably come up for the summer for a few months, do our Option Pit event, do some Cubs games, do some podcasts from the world headquarters of Option Insider, and do some trading from Carmen Line and Option Pit's headquarters in Chicago.
I don't know if I can handle a meatball with a Texas drawl. I'm just saying right now. That's going to throw me for a loop.
they're gonna love my accent in Texas. I can tell you that much.
If you start coming on here saying y'all, that might put me over the edge. I don't know.
Meatball.
Yes, the meatball. Do they even have meatballs in Texas? Who knows such things?
There was, I noticed there was a lack of Italian restaurants in Austin.
A definite dearth of that. Great barbecue, though. I've been to Austin many times. My brother used to live there. I know it pretty well. Check out the Bats. That's their claim to fame over there. But interesting. The meatball heading to perhaps sunnier climes. Of course, not exactly auspicious times for house shopping, so might have to put a little bit of that on hold. But eventually, when all this madness restores itself, the meatball heading perhaps to the southern climes. And also joining us, I'm not sure where he's beaming in from. We'll have to see. He's holding down the MIAX hot seat. Is he out in Princeton? Is he in and around Chicago? Let's find out. Mr. Tom JARCK, the volatility product specialist. Got the right guy over there at MIAX. Tom, welcome back to Vol Views. A, how are you holding up over there? And B, where are you joining us from today? Tom, I believe you have muted yourself, sir. Hit that mute button. We'll hear all your good pearls of wisdom, sir.
Okay, sorry about that. I am actually working from my home over in Rumson, New Jersey, a little far from Princeton, about an hour, actually due east. Just kind of looking out my window here, stuck in my little home office. But, I think like everybody adjusting to working from home, I feel like everyone I've been talking to is a little bit more open now, a little bit more settled and kind of used to this. And, a lot more conversations are happening. And, MIAX, coming off a very busy month volume-wise. Obviously records around the industry all over, but particularly to MIAX, had some great results, and they were pretty excited across all the exchanges. And that's about the quick date for me.
And of course, you are now official, sir, on the old network, because you're not official until you forget to unmute yourself. So now you are officially entered in the logbooks as an official recurring guest. All right, and last but not least, joining us from all the way across the far pond, all the way to the early morning hours of Sydney, where we are joined once again by the Spike's father himself, Mr. Simon Ho from T3 Index. Simon, welcome back to the program. How go things in Sydney? Are you guys sheltering in place like pretty much everyone else in the world right now, sir?
Well, good afternoon to you. And yes, absolutely. So we've been sheltering in place for about 3 weeks. We're at stage 3 lockdown now, which pretty much means you can only go out with one other person. That's the most grouping you can have, is just one other person. So it's pretty severe. But I think they use this word called flattening the curve all around the world these days. But it seems like we may be flattening the curve. Whether that's a long-term outcome, I don't know. But it's pretty much the same as everyone. Most people are working from home where they can and ordering lots of takeout.
Yeah, well, it's been a rough 2020 for you guys over there in Australia. Of course, you had the fires ravaging Australia earlier in the year, and you just kind of get out from under that, and then here comes Corona, a bit of a 1-2 punch. You guys doing double duty there, unfortunately, there, as we keep on rolling right on into the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Vol Review, the portion of the show where we, surprise, review some volatility. And we got some for you yet again out there. So perhaps not as much as there was last week. A little bit of a spoiler there for you, sir. All of you asking, how can that possibly be? Things are moving. Things are moving, you're right, but not quite as much as they were. And at the end of the day, we said many times on this show, the vol math is pretty basic math. If you're not moving X%, it doesn't translate into Y volatility. I don't care what other arguments you may have for it. And that's kind of where we find ourselves today. But we're getting a little bit ahead of ourselves. Coming into today, of course, we were on the heels earlier of terrible jobless claims numbers, 3.3 million, then 6.6 million. So you're talking a total of about 10 million people filing for unemployment claims just in the past couple of weeks. So people were looking towards a pretty terrible non-farm payrolls numbers this morning. And we pretty much got what we expected. Pretty terrible. 701,000 Americans losing their job in March. They're saying that translates to an unemployment rate of about 4.4%. Now, if you're saying to yourself, that doesn't sound that bad. Only 700,000 jobs, 4.4%. People were talking 10 plus, 20%, unemployment. Well, remember, that data only goes through March 14th. So there's a couple more weeks in there. And we know for a fact that there were 10 million unemployment claims in the last 2 weeks. So guess what? That number is going to get a wee bit worse the next time we do this dance next month. So something to keep in mind out there. And so, of course, the market seemed like they were trying to shrug this off because, as we mentioned, people were expecting a pretty bad number out there today. And it seemed like for a little while they were shrugging it off. And now coming into showtime, they're not shrugging it off anymore. In fact, they're heading back to the dark side. Pretty much everything is off about 2.5%. Pretty much everything. The Dow slightly a laggard, about 2.4%. The NASDAQ slightly in the lead, about 2.6%. But pretty much everything off. Gold taking a lift. Oil also getting more of a lift as they're continuing the hopes, the rumors for this detente out there in this kind of ridiculous price war now that is going on top of the demand decimation that has happened as a result of the coronavirus out there in crude land. So perhaps crude bulls getting a bit of a lift over there the last couple of sessions. Now, if you're looking for some optimistic outlook out there, of course, as Tom alluded to earlier on the show here, it's not all bad news. Obviously, these are not the environments anyone wanted, but of course, volatile environments tend to translate into a decent amount of volume out there, and that's pretty much what we saw for March. The numbers coming out of OCC. If you want the full breakdown, tune into the option block yesterday. We did it all for you there, but really quickly, OCC numbers up nearly 63% from March of last year. It's pretty much the most active month on record in the history of the options business. Again, no one likes how we got here, but that's where we find ourselves nonetheless. Also interesting and worthy of note, futures volume, which is predominantly VIX futures out there, was about 7.8 million contracts. That's almost up about 21%. That's decent volume, but again, perhaps not as much as you might think given how active the vol complex has been out there. And as Tom has alluded to, decent run out here for MIAX land as well. I'm looking at the numbers here for March 2020. OCC also breaks things down by exchange group, and their market share in MIAX jumping up from a 7.3% to about 10.3% market share over there for 2020. You get into equity options is even more, 11.5%. So maybe, Tom, we'll start there. Let's start with an optimistic ray of sunshine in otherwise dire times. Walk us through what's been lighting up your tape over there in MIAX over the last week, sir, and what's going on with these market share numbers in MIAX, sir?
I can't really get into too much of the specifics on that. I'll leave it more to Shelley. But, in general, I think, obviously there's been more volatility in the markets. There's a lot more trading going through. I think with some of the floor closings and some of the other, interesting dynamics, there's just been a pickup of general flow over to the MIAX exchange. The technology is top notch, and it's hasn't really missed a beat through the whole cycle here. So it's been it's been pretty enjoyable to watch and be a part of. I'm still learning my way around, so I don't want to get too deep in the weeds and talking about it. But it's definitely been celebrated from to your point. It's not the way we want to be increasing market shares due to coronavirus and all the things going on in the world right now. But overall it's been working well. And from our from the CEO talking, it's we like I said, we haven't really missed a beat. So kind of hats off to everybody on that. And then, it's kind of feeling like, I don't know, is vol kind of dampening here a bit or what? I'll leave that to you to lead off on, but it feels like, things are starting, we're getting a little bit narrowing in the ranges here. So, but this oil move is pretty drastic.
Yeah, it certainly has the feel of a bit of a vol dampening. Let's get to that, listeners. Of course, spikes over there at about a 49 right now. That puts it down, 14, almost 15 handles from where it was this time last show. VIX cash, similar level, at about a 49 as well. That puts it down about 15 handles from where that was last show as well. So I think fair to say a bit of I like that term, a dampening out there in all things vol. And of course, the volatility, aka VVIX, also down to about a 145, puts it down, a whopping 70 handles from where it was this time last show. So like I mentioned, things are still frothy, things are still volatile. VIX and spikes around 50 are by no means not volatile, but also down from their historic, some might say, just unsustainable levels. I mean, we were moving 4+% a day for weeks on end. That's not sustainable in the long, at least no one wants it to be. sustainable. Most of that movement was also in one direction for quite some time, which led to some problems out there in the market. We'll get to those a little bit more in a bit. But first, let's go back across the pond. Simon, we find ourselves in interesting times once again out here, sir. What is catching your eye out there in T3 and indeed Spikes land, sir?
Yeah, well, you said it. We live in interesting times, and that's a bit of a curse in terms of Chinese rhetoric. So that's definitely been true. I think what's been catching my eye is we've been expecting the vol to come down. I mean, like you guys and like most people who are professional vol traders, we knew that the up at 60 odd in the index and almost that, I think, for the April contract, it was simply unsustainable, and still probably is. I mean, the level is extraordinarily high relative to history, and also, as you say, things are quieting down a little bit. Of course, nobody believes that we're out of this coronavirus thing by any means in the short term, but I just think that this is very, very, the term structure is extraordinarily backwardated, and the vol level is still very, very high. So a couple of things, I suppose, that I would like to note this week. One, I think it's very interesting. Last time I was on the show a few weeks ago, we were talking about 50 Cent, and we were postulating, I think Meatball was on then as well, where we were talking about how much 50 Cent would have made on that trade. I saw an interesting article yesterday in Zero Hedge, for those who haven't read it, where he sort of came out yesterday, outing himself. His name is Ruffer, and it's the fund that it's an eponymous fund, so it's called the Ruffer Fund. He basically, we all know he made a mozza out of that, but he has now decided that using VIX, at least for the medium term, is not going to achieve his aims, and he's actually switching to gold. So I found that very interesting. So, if he's stepping away, then that certainly takes out some of the bid that would be in the market naturally for this stuff. So that, I think, was a very interesting turn of events. The other note I would say, there's an article, I think it's today in Bloomberg, but there's an article here talking about how the short volatility bet in variance swaps, so this, rather than doing it via the VIX, which is a kind of a synthetic invariance swap, you can do this over the counter, so you can sell variance swaps. And so this is more for the professional market who can do stuff off exchange. But apparently that's short S&P index vol via variance swaps has lost people in the order of sort of over 46%. So that's a bit of a travesty, and I think... Yeah, and you'll also lose some players as a result of that too.
I mean, well, it totally makes sense, right? Look at the realized vol that a variance swap had to deal with, right? I mean, that was, where were 1 year, 6 month, 90-day variance swaps pricing themselves 45 days ago, right? Nowhere near where we actually moved. And those completely blew up. And in terms of 50 Cent, I can't say I disagree with them. We've gotten, the thing about vol is it is the ultimate hedge, in my opinion, when implied volatility is low, when risks are low, when it's a risk-on market. Volatility hedges everything. It will hedge, it's a non-correlated hedge to bonds. It's a non-correlated hedge to equities. It's a non-correlated hedge to, just about everything except for maybe gold. But once you get your big blowout move, you have to wait for it to kind of reset itself before you can start using it again. If that makes sense. So. It is the end all be all of hedges 90% of the time, but it's like it's one of those, once it works, it stops working for a while, and that's kind of where we're at this point. And so I think that volatility makes a lot of sense in terms of you directly in the indexes. Now that we've gotten our big sell-off and volatility is pulled back, to me, I can reasonably hedge in the actual equities. One of the things that what made VIX such a powerful hedge for the first quarter is that if you bought puts on the opening market price at the beginning of the year, and then bought about the same amount of protection in VIX, you far outperformed using VIX because we rallied 400 points between the beginning of the year and the top of the market, when really where everything really fell apart. We were, 15 points from the top of the market when all of this began on that weird sell-off on that Thursday. So your hedge that you bought, your 6-month or 1 year hedge that you bought using a June put, did not pay you very well. Unless you bought did like a Bridgewater where you bought in September a ton of way out of the money puts in like March, right? Then you had to have almost perfect timing with those. If you bought a January 2021 put or a June 2021 $3,000 or $2,800 put, it worked, but not at the same rate and to the same success that the owning out of the money VIX calls in May and April and June worked. You just did exceptionally well, like 50 Cent said, buying the 22 calls relative to buying a 2,800 put. If you spent the same amount of hedging dollars. Stop me if I'm saying, but now that we've got the VIX at 50, it actually works the other way. I can quantify how far I want to hedge down, where we're priced, and put a reasonable risk reward on what I'm trying to hedge off. I can use things like put spreads now that we've gotten that big move, and set up a hedge that will be relatively effective in equities, and probably steer a little bit away from the vol hedge. I think the vol hedge has played itself out.
Yeah, I'm looking here at 50 Cent's his own words. I'm always leery of what Zero Hedge has to say. Take it with a grain of salt, but they're actually, looks like they're requoting from Financial Times, so a little bit more reliable source on some of these items. And they're saying his name is Jonathan Ruffer. He's a hedge fund manager out of Ruffer Capital in London. He had a long letter to his investors here. I'll just pull up some interesting nuggets from him. He says this is a far harder market to navigate than the crisis of 2008. I think we've all said that on this show in the past. These are much different times than we saw back in 2008. The markets are very different than they were back in 2008. In some ways, much better. Many more products available, usually more liquidity in some senses, other senses, not so much. We're going to get to that in a little bit as well. Of course, we're all completely electronic now as well. There are no floors to rely on, which is an unforeseen circumstance out here. But he kind of sums up exactly what we were just talking about here. He says he picked up the VIX because the volatility catastrophe insurance was relatively cheap. And there were many people who were happy to enter the other side of the trade with him. But these days, he says the catastrophe insurance did absolutely everything that might be expected of it. He bought VIX calls. He also says he bought some puts on like the S&P or indexes here in Europe. So those also worked pretty well. He said it is now spent, which kind of gets back to what we were just saying. It has to reset itself a little bit. It is likely to be some time before this insurance again prices at levels that makes it attractive as a defensive investment. I don't see him mentioning gold, but that could be a later part of this article. Mr. Meatball, 50 Cent kind of agreeing out there that VIX, at least for the time being, sir, is a spent instrument. Sounds like you concur as well, Mr. Meatball.
Yeah, I mean, in terms of what he was trying to accomplish, yes. Does it still have all kinds of other wonderful things? VIX, spikes, any of those options. Do they still have all kinds of wonderful things that you can do with it? Yes. In fact, at this point, I see volatility as a wonderful, and I mean this, I see volatility as a wonderful short hedge. So I think the trade that I've been kind of zoning in on or eyeing is almost like short the market, short vol, or short vol, long put 1x2 or put butterfly. There's a lot of really cool things you can do But volatility, if you're a market short that thinks that we're going to go to hell in a handbasket, you should be hedging your position by shorting implied volatility. And so think like the opposite of a hedger. I mean, it's still hedging, but most people think volatility is only for hedging the market tanking. No, volatility is a wonderful hedge for market shorts once it explodes. And, that is where it is highly effective with what I'm seeing right now.
Certainly are some interesting setups out there. Before we go any further, I touched earlier at the start there about some of the positive signs of everything that's going on out there in terms of course, volume. All this volume is coming in spite of the fact that there are some concerns and some issues out there on the liquidity front. Our buddy Mr. Matt Amberson from ORATS was on our Advisors Options show last week. He kind of mentioned this, what he's seeing out there in terms of spreads. Made him sad as a former market maker, quite frankly. Andy Nybo out there I believe he's from Burton Taylor, and I used to be a Tab Group analyst, put an interesting piece out about the volatility market makers out there in the space and who's playing out there and how well they're doing. And Matt kind of responded to that as well, saying, but the tragedy occurring in the options market is the bid-ask spreads in the less liquid names. Below are the weighted average bid-ask spreads and implied volatility points for the S&P 500 components. They usually average about 0.5% wide, and normally they reached an astounding 11% in 2008. And again, going back to how the comparisons from now to 2008 aren't quite the same thing, they've more than doubled since then to now. In the past few weeks, they're now 22% wide. He calls this not tradable and a threat to the overall business. Kind of hard to argue with him out there. And your buddy, Mr. Rock Lobster, also chiming in on this today. He put out an interesting tweet. I just like it. He drew a little stick figure. He calls him Volman. He says, Volman looks at the volume in VIX and is sad, sad, sad. He has lived through many bear markets, and he knows the lack of liquidity is the most telling sign. Maybe the news is this weekend is getting better. Tom, you're our go-to exchange guy here. I'm kind of curious, are you guys seeing this as well out there across the markets? Are you hearing these complaints from some of the market participants, and are you surprised that we're still able to put up the numbers that we're putting up, despite the fact that things are getting a little dicey out there, Tom?
I'm not directly, my role at MIAX is focusing more on the vol products. So I'm not really talking to the clients about the bid offer spreads, and being that we're a little away from the office, it's hard to get a grasp of what a lot of those conversations are. But even myself, in my own personal trading and just looking at the markets in general, I do definitely see, bid offer spreads, quite wide, and depth of market is much less. And it's natural because you're at a higher vol level. And I think as, traders and market participants become more comfortable with these levels, things will tighten again. You'll see some of that happening. But as things move more, as volatility is higher, that you can trade, I guess, less size and pick up bigger spreads than in times when vol is very low. You need to trade bigger size to get the same P&L, if you will, because the bid offer spreads are tighter, things aren't moving as much. So I think that's a part of it too. Is just the people can thin out their liquidity and widen their markets a little bit and still have the same revenues as trading more capital and more tighter spreads and higher volumes in normal times. So I don't know if that makes sense, but it's definitely definitely seeing things widen up in general across the curve, across all the different products.
Yeah, it's something we've been echoing on this show for a while. Stay small, stay nimble out there. You don't need to trade size in markets like this. Small, a little bit will do you out there in markets like this. Mr. Meatball, what do you think about what your compatriot, the Rock Lobster, has to say out there? And are you, too, a fan of Volman? I like Volman. I think he needs to make more appearances, sir.
I told him that he should turn it into a comic book. And his wife's an artist. He should employ her to make Volman not look ridiculous. But yeah, there's that I think that there's a hope for Volman if he can get a face, a little more definition. He could use some working on.
I'm down for a Volman comic book. I think that would be amazing. Simon, are you seeing these same kind of concerns, or are they not perhaps as pressing for you out there right now, Simon?
Well, Matt's obviously the resident expert relative to me, but I would echo what Tom was saying in that I think this is a natural function of markets, obviously, because, the more wild that prices become, the less you need to do to get the same bang for your buck or loss if the case is that way. But yeah, I think it's fairly natural. I mean, this is the sharpest fall of any fall in the U.S. equity market ever, including the Great Depression in 2008 and 87 and 2003. So this is unprecedented in terms of markets and uncharted waters. So of course the bid offer spread should have widened dramatically. I guess I'm just echoing what all three of you have already just said. I mean, it's a function of markets. Yes, it's a bit unnerving, but I think what's happening is probably people are rotating into more liquid stuff rather than doing the peripheral, which makes it even worse. It makes it appear worse, because if you look at the sort of the 15 or even 20% of the bottom least traded stocks or stock options, of course, people are going to shy away from that and eschew that for the more liquid names. So I don't think this is a problem per se. I think it will pass pretty quickly, if the VIX and spikes can sort of stabilize.
Optimistic outlooks. I like it. Not usually the case here on Volatility Views. Let's head on out to what actually is lighting it up out there, starting Spikes land. First, Spikes options, OI, looking pretty similar to what we saw last week. Number one spot out there, the top 5 spots out there in Spikes options land. Number one, the April 25s, 35,500. Number two, the April 17s. That's the old 1x2 again, listeners. Still a decent chunk of that open, 17,750. Number three, we got the June 95s. Number four, April 130s. And round out the top 5, we got the July 24s. Total about 54,000 calls. There used to be one put open out there. That put has now gone away. So no puts. All calls all the time out there in Spikes options land. Let's move on out. Keep the ball rolling in VIX options land. Like I said, we've seen this movie before. We're not moving quite as much as we have in the past. So that's not exactly translating into a ton of paper on the tape out there in VIX land. The ADV is still frothy, even though it's come off a bit. It was closing in on 1.5 million contracts not too long ago. Now it's closing in on 1 million. Down the other way, about 1.07 million right now. The volume coming into today's show was pretty light. It wasn't even 200K. It was about 181,000 contracts out there. So not exactly a blowing the doors off week, but we're also not moving 4+% a day, and we're not setting off circuit breakers every day. So that's also frame of reference is an important consideration out there in the context of volatility. Let's break down the top VIX positions out there, see what's lighting it up. Number 10, cost you 112,000 contracts to break into the top 10 in VIX land. That gets you all the way to the April 30s. Number 9, 113,000 of the July 28s. Number 8, June 15 puts, our first put on the list, 115,000. Number 7, May 32 halves, 117,000. Number 6, April 50s, $1.18. Number 5, 127,000 of the April 22s, the puts. This time, 129,000 for number 4 of the May 28th. Number 3, $1.31 of the April 45 puts. How interesting the times we're in right now with the 45 put seems reasonable. Number 2, we got the May 35s, 144,000. And the number 1 spot out there, again, kind of reflecting how, even though the OI is pretty strong, the overall top position is pretty light. Only 169,000 contracts to get to the number 1 spot in VIX right now. It's the April 20 puts. Interesting. A lot to unpack there on that one. Let's head on out really quickly to see what we're trading out there in VIX land. Again, kind of a light day, like I said today, only 181,000 contracts on the tape. Coming into showtime, the big print looks like it's a funky three-way. So the May 50, 70, 90 vertical going up a few different times, 8,300 times, 4,800 times, and 4,157 times. Also 2,400 times. So bunch of weird prints out there, but again, a total of only 181,000 contracts, so not a ton to parse out there today. Yesterday, similar numbers, 226,000 contracts on the tape. The big print was about 6,500 of the April 37.5 puts. It's kind of quiet in VIX land when the big print is a 6,500 lot out there. Also saw what looks like maybe, I guess you can call it a funky ratio iron condor, maybe. It was the April 30-40 put spread being done on a ratio 3,800 by 5,700 times against the April 75-110. 75-110 with the strikes on the upside, listeners. 5,750 by 3,832. So ratios on both of those. So it looks like it's a 40-75. Those were the guts there against the 31-10 out there on the wings of this funky ratio iron condor. Weird print. I guess if you add up all those contracts, it's a little bit more than 6,000, but still just a weird one kind of across the board. And looks like also maybe a bit of an April risk reversal. The 840, 67.5 risk reversal going up nearly 5,000 times for about, looks like 20 cents. Wednesday, 300,000. That's again light paper, which is why our ADV is coming in. The big print 870s, about almost 6,000, 5,700 of those, as well as looks like an April, June 75 call roll, which is kind of funky. We're in funky backward land when the 875s, when that roll is being done, and you're actually collecting, looks like 8 cents. 245 for the June 75s and 257 for the 875s, 5,000 times. That's the world we live in right now, listeners. Backward as the day is long. The July also looks like May 75, July 70 spread there going up for looks like 60 cents, about 4,700 times. The big day of the week was actually Tuesday, about 500,000, a little more than that going up in terms of contract volume. Again, kind of quiet overall. The biggest prints out there, the biggest, most active contracts were the April 23 puts. They went up in one print 33,000 times, and that was kind of the big print of the day. They got 17,000 of the 837.5 puts. Those went up at a different time, though, so those are not related, even though you might think they were, because they're about 17,600, so it kind of lines up for a ratio, but they went up about an hour apart, so perhaps not. And then Monday was 424,000 contracts, the big contract of the day. Looks like it was the April 45 puts going up 23, almost 24,000 times. Mr. Meatball, as you've been busy trying to create the realistic-looking Volman, what is going on out there? What caught your eye out there from an overall VIX options perspective, sir?
I mean, the volume has been a little light given where VIX is. I think that's partially about where, partially about the fact that there's no pit for people to be trading in. I think if anybody, I think the SEBO will absolutely come out and say, we're definitely bringing the pits back because it has had an absolute impact. They're definitely the losers of all this. You got to say from an exchange standpoint. The VXX and UVXY and TVIX and SPY have been able to steal, I think, a decent amount of volume from SEBO. Biggest trade that we've seen today, I think you brought this up, was the 50, 70, 90 call fly on a bit of a that's gone up. Looks like about 13,000 times. They bought the 50s for 620 and sold bought the 50s and 90s and sold the 70s, which is not a bad little trade. Think about it. This time last week, they would have been doing the 90s would have been the center strike, not the way out of the money strike. Just shows you how things have moved.
How insane is that?
I would note that there. Here's an interesting one. We had a buyer of the May, July 100 call spread. They bought the May, sold the July, and they paid 16 cents. Kind of an interesting take on playing. That's not a terrible idea in terms of, how to take advantage of where everything is. Selling a 100 calendar spread in case things really blow out between now and May is an interesting idea. And so, I got to say, frankly, I'm a little surprised we haven't started seeing curve trading going up. Short, just an idea. And I know Simon's the curve trader of the group. So, but you go out to like August, September, and October, and there's some really interesting curve trades like the Aug Sep. Why wouldn't I want to sell the August September 35 put spread or 40 put spread, or the September October, also a little tight. Obviously October has that election in there, but or the July August. those are, 35 put spread, creates some, really interesting curve trading opportunities for vol traders that maybe make some sense. So, for instance, the July-August 35 put spread, selling, and Simon, if you do this trade and make a bunch of money, I'm expecting a check in the mail. The July, I can buy July, sell August, the 35 put spread, and collect, almost $1 on that. That's not a bad little spread. If you think that vol's gonna back off, maybe even more interesting is like the August September as another spread idea. So there's some curve trading opportunities that we haven't seen in a very long time, and we don't normally get to see.
It's funny. You're right, because we were in that environment right before all this started breaking. We were talking here on the show about the blip around the election cycle and how that seemed to open up opportunities. And we were talking about a lot of volume here in the weeks leading up to all this madness and the sell-off. There was a lot of curve trading going on. There were most of the trades we were breaking down were some sort of, diagonal or calendar taking advantage of the funky term structure out there. And you're right, crazier things have overwhelmed them, and that seems to have fallen by the wayside. But Mr. Simon, since you have been invoked, sir, have you been out there slinging the old curve, or have you been too busy, what'd you call it, stage 3 quarantining, sir?
Yeah, we actually have been trying to take advantage of that sort of stuff. So I'm not sure how Meatball came to know that I enjoyed doing spreads, but, well, obviously he's an astute pundit. I think those sorts of trades are really good, actually. I mean, I didn't realize that, obviously I'm not paying enough attention, but to earn $1 to do that trade, I think that's a no-brainer. We put on a very small trade where we were short the future in June and bought the August. That worked for us very well, because we did that circa 60 something, just a tiny trade, because it looks so obvious. We thought we got to have something on there. But yeah, I think those are pretty good trades. And for people who are listening to the show, I mean, if you want to think about a sort of a much dialed down risk position, these things right now are pretty good. I mean, obviously, if you go short something here naked, then you've got to expect that it's going to be a lot of volatility in terms of the P&L. But I much prefer doing these types of things in this circumstance.
I don't think we have a lot of people on the network, Simon, who aren't spreads first. Usually, naked crazy folk. They don't tend to get on the network all too often. Tom, I know you're holding down the exchange hot seats. You're not probably watching the flow going up on other exchanges. Maybe you are too often. But I know you used to wear that hat out in the vol space quite a bit when you were making a living on the P&L edge. What are your thoughts on what you're seeing out there from an overall just vol and indeed trading perspective out there right now, Tom?
I think from a higher level, somewhat similar to what Mark was alluding to earlier, in some of the conversations I'm having with some, just friends or just people in the business, just talking about like market recoveries, what to expect, when's the market going to bounce back up, and like personally, I don't see that happening for a while. So you talk about a V shape versus a U shape, more in the camp of the somewhat of a U shape. So I do think personally, in a broad view, I feel like vols have a lot more to come down relative to equities going back up. So it's almost it's almost like doing a stock replacement strategy, but using short vol instead of long calls. Because to play a rebound in the market now, it's if you're putting all your equity to work, it's tricky versus buying calls, and calls the vol so high, so you don't want to do that. So I think just in general, I think the vol landscape has a lot of opportunities right now for a lot of folks to get to do some different things, different strategies. And I know I think it was 2 weeks ago, Mark had brought up also like just the put selling on some single names. Just hearing a lot more whether it's chatter or just seeing news blurbs or recommendations from people on some of that stuff. So there's a lot more opportunistic vol sellers out there looking at trades like that as well. So those are some of my favorites too.
Speaking of fading vol, one of the ways people like to do that out there these days is, of course, our old friend VXX. It's working out a little bit again. Maybe we'll get to maybe not in a little bit if we get to some of your questions in the mail. We're at a little bit about a 47 or so out there in VXX land. Puts it down a little over 3 handles from where it was this time last week. We said it before, though. The vol out there was pretty rich. So all of you out there who were trying to load up to the downside and swing for those fences, it hasn't exactly blown the doors off perhaps the way you might think. The volume today not blowing the doors off either. Only about 130,000 contracts on the tape coming into showtime. The ADV also coming off a bit. It was threatening that 600K level to the upside, now about a little bit shy of 500K, about 481,000. Still pretty active contract, obviously, but a little bit off the highs out there. Let's go really quick. Let's only do a top 5 here because we're coming up against it out here in VXX land. Number 5, the May 20 puts, 51,000. Number 4, about 67,000 of the June 18 puts. Bit of a theme here. Number 3, we got almost 71,000 of the April 25 calls, our only call in the top 5. Number 2, 91,000 of the April 25 puts. And number 1 with a bullet out here, 96,000 of the June 45 puts. Just to compare and contrast, that stands up against the VIX is about 169,000. So you're talking about 70,000 contracts separating the number 1 VXX position from the number 1 VIX position, which is somewhat strange, not usually the way these contracts go down. Total open of about 2.8 million contracts out there. Mr. Meatball, I know your crazies like to sling themselves a little VXX. Lately, it's been a little bit more challenging out there. What's been catching your eye? What have your crazies been up to in the Vol Trading Club? Or have they been doing anything out there in VXX of late, sir?
Well, just to kind of put things in perspective of how much people are looking at fading these vol products, out of the money downside vol in puts is as expensive as upside, which is almost unheard of. Normally, they have a pretty steep inverted curve where calls are more expensive than puts. It's now very much a flat curve where the way out of the money put is as expensive as any out of the money call that you might see. Yeah,
you're right. That's not typically the case for all things like VIX and spikes and other vol products, where 99.9% of the action usually hanging out on the calls. These days, not so much. These days also, you said VXX has kind of been a little bit more, except for today, the top 10 is, there's one call, listeners. There's 90% puts in the top 10 out here in VXX land. The big prints out there today, the April 25 puts, looks like they're going up about 11,000 times so far today. There are some earnings still come up today, including the owners of Corona Beer out there. If you want all those reports, theoptionsinsider.com is the place to go. Matt and his team at ORAX cranking out some good stuff. You can find it there. Just head on over to ORAX.com. Meanwhile, we got to keep on rolling. Get some of you guys on the show, a little bit of your volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody, welcome to the Vol voicemail. Let's see how many we can squeeze on here today. First off, we asked you guys at the beginning of the week, what were you thinking about these levels out here? S&P had just crossed 2,600 to the upside. We said, let's go out a little bit. Let's not just play on the week. Let's play a month out. What are you feeling? Are you still fading it? Are you feeling the love? And so far, you guys still heavily into the fade. Looking at the live results here, it's about exactly 66% right now for lower than 2,600 a month from now, which would equate to a dead cat bounce higher, above 2,600, only getting 13.2%. And right around these levels, so pretty much net nothing on the month, which is kind of interesting. A little bit shy of 15%, about 14.6%. And those of you who are sitting in cash and thumbing your nose at the world, you're a little bit north of 6%. Get on over to Options if you haven't done so already, listeners. Make your voices heard, just like a lot of our listeners have done so far. Like this one, I just like this guy's his icon on his account. Tiger Bomb Trader. He's got this really angry baby with a curled up fist as his icon. I just love that. He says, I'm a huge fan of your podcast, by the way. He loves the huge whale VIX spread trade that Mr. Meatball uncovered from Time and Sales on one of the recent episodes, just as an example. So there you go, Mr. Meatball Angry Baby Guy here liked your live. Remember that it was the ratio trade we talked about a few weeks ago on the show, Mr. Meatball. So you got some fans out there, sir.
You know what? I should have fans. I'm like the glue that holds this whole network together.
Yes, without your southern twang, we would have problems.
The y'all.
Yes, the meatball y'all. That's going to be a scary time for all of us when you start sounding like that. Yeah, but Tiger Bomb Baby. He's cracking me up here. He loves that. Let's see. Nick wants to know. Maybe we'll save that one. It's a little bit more involved. Adam's got a question everybody has on these days. Adam wants to know, is it safe to start buying options again in VXX? Has the vol crash happened? We were talking about it on the last show. I think we had a listener write in saying, what's up with these markets on these VXX slightly out of the money puts with like a week or two to go? These things were crazy. Well, I think they were about $1.50 wide. They were trading, crazy levels. If you, as you would have to in this environment, came close to lifting that offer, you can't really work it. The prices you would have got, even though VXX sold off, the amount of vol you were buying, it was pretty painful because the options pretty much didn't move. So it was kind of a bit of a dangerous road. We're still kind of in somewhat dangerous roads. Mr. Meatball, we were just talking about this earlier on the VXX section. I'm curious, have your crazies in your pitch chat, have they started to dive back into those getting long some premium in VXX waters, or are they still a little dicey?
Yeah, the way we've been doing that is ratios and selling stuff. Going into this move lower, the cost of like longer dated 10 puts, 5 puts, 15 puts were just astronomically expensive. So while many of our guys have been buying premium, they've been doing that in conjunction with selling on a ratio downside. So I don't mind being a net owner of premium, buying the 40 puts if I sold 5 of the 10 puts against it to take advantage of all that crazy downside skew that is floating around out there.
Yeah, we said it before. People have asked us if we like ratios. It's not usually the sexiest thing in VXX, but out there in these crazy aberrant times, you kind of got to do something. You can't just go whole hog and buy that vol. And so, yeah, ratios make a certain amount of sense. What doesn't make sense, Mr. Meatball, is you're getting way too much love here from our listeners. I might have to dial this back. You're going to get an even bigger head than you already have. First off, we got Marco Pirio chiming in. He was chiming in on your comments from last episode where you said if you have a financial advisor and they just rode this market all the way down, then it's time to find a new financial advisor. And he sent in, we have a creative bunch, our audience. I guess this is, I don't know, maybe it's from The Simpsons, I don't know. It's just this really sad-looking guy, an image in an old abandoned office, all sad. And he's on the phone with someone. He's got a cigar hanging from his mouth. And it says, the caption below just says, "It's your stockbroker." So there you go, Mr. Meatball. That's who's out there in the stockbroker land. Those guys. What do you think?
Yeah, not a good time to be a just buy indexes broker, because we continue to show that they've now been reset where every fund is going to be way out in front, right? Like, so my fund is currently up on the year. If I just go in and buy indexes now, which I could do, the net return I'm going to get if they end unched is going to be phenomenal, right? And that's why what people are paying you pay your fund managers to outperform in sell-offs, not to keep up with the indexes when you just have carpet buying. And that's something that I think the retail public needs to get in their head. I mean, I literally had a guy try and pull his investments out in January, and I was like, "What are you doing?" And he's like, "Well, you didn't keep up with the market." I'm like, "Oh, just give me a chance, bud." And he's a happy camper that I talked him out of it. And that is what you're paying your manager to handle this. You're paying your manager to do 80 to 95% of the S&P on the way up and 10 to 20% of the S&P on the way down. If that's not the way his or her dynamics look, then you probably are not using a very good manager.
I want to pay them 2% and 20 just to buy the S&P. That's what I want. That's what everyone wants out there, Mark. That's the gold standard out there. Let's really quickly see if we can squeeze a couple more of you in before you got to get to crystal ball. I know a lot of you have questions. Let's do some quick ones, comments. I think it was Mark Brand, our old buddy here, listening for a while. I think this came in last week. He was talking about downside in VXX as well. He said May 15th, VXX 21 puts at 50 cents could double if closed at 21 days to expiration. Well, I haven't checked on those. Hopefully they're doing all right. I haven't checked on those. They came in a little while ago, so hopefully you did all right. Hopefully you got out of them judiciously. And maybe looking at some of those ratios we're talking about here, Mark, because that's 50 cents is not bad. 50 cent. Our old friend 50 Cent likes it. But in general, those puts can get pretty dicey the farther out you go on that downside. One more here. Then we got to cut off the freaking meatball love train here, because this is just getting out of hand. Alex Lundgren, I think he wrote in last week. He said, I just tuned into the show when you guys started answering questions. He said, had option pit explanation using futures, and he put a hog face there for some reason, I'm not sure. Was spot on. Volatility Views, a must listen as always. Thank you guys. Well, you're welcome, Alex. I forgot what your question was, but hope to keep you guys happy in these crazy times, as now is time to turn the tables on us, make us look crazy as we head on into the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the Vol Review, the crystal ball. Vol Review was earlier in the show. The crystal ball, where we talk about where the heck we think Vol is going to be for the coming week. And, last week I think the technical term was crushing it, 62, pretty much even, which is exactly where Vol was, of course, last week. Coming into this coming week, not so much. I was feeling a little bit more Vol than we ended up. I thought we would kind of maintain a little more than we did, quite frankly, because coming into the latter portion of the show now, let's see exactly where we're ending up here. We've got spikes at about a 49 even, which I'm not liking because someone's going to get excited in a second. And we've got VIX Cash at about 49 and a quarter. So, Mr. Meatball, I am very sad to say that we have swapped places, because now I am the one, so let's say a few handles off, and you are the one who is looking unerringly precise. Did I inspire you last week, sir? Because you're at about a 49.38.
Yeah, you did. It was almost a dead-on spike in the ball, bullseye type of guess. So go me. I'm super excited.
Well, you know what that means then. You get to go first, sir. So what do you got in store for us next week?
You know what? You let me go first last week, so I'm going to let you go first this week.
Okay. I was a charitable fellow last week. You're right. So, yeah, we are. At least one of us is getting a bullseye week on week here for a while. So we're doing some of our duty out here to the listeners. All right. So that said, we're at about a 49 in both the spikes and the VIX out there, we still are in turbulent waters. But like I said, we are selling off a wee bit here from a vol perspective. The sell-offs could continue in the broad market, but I don't think we're going to continue a pace of this 4+% that we're seeing. That said, the news on the healthcare side is pretty dire. Obviously, the economic side, we just talked about non-farms top of the show, also pretty dire. I don't expect that to lessen in the next couple of weeks. In fact, all the information says it probably will be worse. The question is whether that will translate into enough sizable move to maintain these levels of volatility. I'm going to say over the course of the next week, I think we're going to be a little bit higher than where we are. I hate to play the Russell Rhodes game again here, where I'm picking higher the last couple of weeks, but last couple of weeks I have been, and I'm feeling it again, not as high as I was last week, obviously. And I'm going to go back up. I'm going to say we're going to be about 5 handles north of where we are right now. I'm going to say a 54 even. Mr. Meatball, I'll give you the choice. You want to go second, or you want to let Simon go second?
Simon can go.
All right, Simon, you have been invoked, sir. What are you feeling for this time next week in VIX and or spikes, sir?
46 even, both.
Oh, nice.
Look at you. Someone came prepared for today's show. I like it. All right, Mr. Meatball, what are you feeling, sir?
I got to say, I'm more in agreement with Simon. We're going to see both the S&P 500 and the VIX/spikes down on the week next week. I'm going to say 41.38 for the VIX/spikes, and I think the S&P 500 may close 4% lower, 4 to 5% lower than where we currently are, despite that.
And that insane times that we're in. And Tom, I don't want to leave you out. I know previously Shelley and others John haven't wanted to play in the crystal ball segment, but you wear a volatility hat over there, so it wouldn't be out of the realm of expectation for you to have some thoughts on the vol space. Do you want to join our crystal ball partay, sir?
Sure, I could throw out a number. Before this is prior to anyone else's comments, my number was 41. So in spikes.
Oh, sorry.
So no, right there, but I'm going to go with 41.
There you go, 41. I like it. So Tom, coming to play. I like it there in the MIAX hot seat. So let's give you our breadth of markets here, listeners. We got about 41 on the downside with Tom. Then we got the meatball at 41.38. He was looking pretty good this week. Last week, not so much. I flipped that for me. I looked really good last week. Not so much this week. Simon coming in Goldilocks in the middle there at 46. And me, uncharacteristically on the upside a couple of weeks in a row here at a 54 even. All right. Unfortunately, listeners, that music means we've come to the end of an epic journey here on Volatility Views. It's also the end of our broadcast week here for the network. Hope you guys are staying safe out there, staying sane. Hopefully our content is contributing to that in some way, shape, or form, helping you stay home, giving you stuff to do while you're home. You want to escape from your kids for a little bit, the family go off in the corner, listen to some podcasts. We got you covered. 13 years worth of content, so you won't go wanting. People have been asking for a while. You're going to get that best of feed up. Probably a good time maybe to do that now, so maybe we'll do that to help you navigate the minefield that is that 13-plus years worth of content. But before we go, let me go back around the horn. Tom, we'll start with you. Obviously, these are busy times in MIAX/Spikes land. If folks are intrigued, they want to learn more about Spikes or what's cooking in MIAX, where should they go? What should they do, sir?
I think ideally the website, miaxoptions.com, would be the perfect part to start. And then, we also there's more detail in there about Spikes, and you can find your way through there. Or look me up on Bloomberg or whatever you need to do.
There you go.
Thank you.
There you go. Good starting point. MIAXoptions.com/spikes gives you that snazzy little 2-minute video overview. Got all the data there, closing prices, settlement. Links to a cool show called Volatility Views you may or may not be interested in, as well as a lot of other fun stuff. It's a good place to begin your journey. Chances are when the futures come back, you'll see the news there breaking as well. So MIAXoptions.com/spikes, the place to go. And Mr. Simon, a.k.a. the Spikes Father. If folks are intrigued, maybe they want to check out a milkshake or two, or what some of the other stuff you guys have cooking, where should they go? Also, if you got a hint or a tease for what's coming down the pike, sir, now is the time, Mr. Spike's father.
Absolutely. So, if you want to look at check out the stuff that we have on offer in terms of indices and so on, you can go to t3index.com. And no teaser today, but in the coming weeks there will be one. So stay tuned.
You've been teasing us for a while, sir. One of these days we're going to get it, but t3index.com, the place to go. You can get your milkshake. You can get your BitVol, get all that good stuff. A lot of vol on crypto side these days as well. We've been talking about that every Monday on our Crypto Rundown program out there as well for you listeners. In the meantime, t3index.com, the place to go. And last but not least, if you want to catch him before he has a tremendously off-putting Texan drawl, before he starts saying y'all, you want to head on over to optionpit.com. Mr. Meatball, what will they find there, sir?
I mean, we've got 2 blogs running that you want to be a part of, our Pit Report and the Vol and the VIX Edge. So come out, read everything, check everything out, and read read the blogs. If you're not reading us, you're missing out.
There you go, optionpit.com. Read the blogs. Doesn't cost you a cent, let alone 50 cents. And then, of course, you head on over to their webinars, all the other fun stuff that they do to keep yourself occupied. And, of course, on behalf of the Meatball, soon to be the Texas Meatball. I'm not sure what Texas-style meatball is. I guess we'll find out one of these days. And, indeed, Simon and, of course, Tom, who's nicknameless, at least for now. And, indeed, myself. I want to thank all of you out there for downloading, streaming, subscribing, for sending in your questions, for listening live, listening after the fact. We love you all. And, of course, stay safe out there. Don't go crazy. We need you guys to listen. So, without you, we're just talking to ourselves. And that's not quite as much fun. So, stay safe out there. And we'll see you back here on Monday. We'll kick it off again on the option block all the way through to Friday again, where we're back for more Volatility Views.
Volatility Views is brought to you by MIAX. one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.